Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Exchange in Miami. Joining me for this segment, we have Eli Horton, Senior Portfolio Manager with active ETF investments at TCW. We're here to discuss key themes for 2024 in terms of investments and how advisors should be thinking about ETFs for their clients. Eli, it is great to have you with us. Welcome to Trade Talks. Let's talk about some of these opportunities and investment themes, one of them being longer term to kick off with the power grid, which I think is fascinating.
Yeah, the power grid is one of the biggest opportunities in front of us right now. And taking a quick step back even further than that, we're invested in two very large themes. One is the transformation of our energy system, and the other is the transformation of manufacturing and of our supply chains being brought back to North America. Within the energy transformation, there's many systems that need to operate and function in a coordinated fashion for us to get from a fossil fuel generation state to a renewable power generation state. One of those systems and one of those themes that we're excited about is the power grid. Give you some history on it. So if you look at the past 20 years, in North America, in the US, power consumption has been dead flat, which is weird. Population's grown, GDP has grown. Why would that be? Manufacturing has left the country, and also we're more efficient with how we use power. That is all changing very rapidly. Over the next 25 years, power consumption in the US is expected to roughly double, which means we need to double our grid, actually more than double our grid, because the incremental power generation we're bringing on is from solar, it's from wind. When the sun shines, you get power. When the wind blows, you get power. These are intermittent, and it's very complex technologically for grid operators to handle those sources of power. So we have this bottleneck where we need more from the grid. We have problems all over. Texas declared a state of emergency with its grid last year. There's brownouts in California where I live. A lot of problems. This creates opportunity. So we've dissected the grid all the way from the power generation side to the distribution and transmission, all the way to how power is used in a building like we're in now, in data centers, and we found some very unique investments throughout. I'll give you one. A company called Vertiv is a large investment in our energy transformation fund. Vertiv supplies power management and thermal management products to data centers. Data centers are extremely power consuming, and it's only growing even faster with AI models, with GPUs being deployed. So Vertiv is one of many examples of companies we own in this system, in that theme.
Right, and you're seeing opportunities in waste as well.
It's right. So again, in the energy transformation strategy, the systems are broad. So you say waste, how is that related to transforming our energy system? A few different ways. One, companies like Republic Services or Waste Management, they're providing services at these large industrial projects, like building large renewable energy facilities. But they also have a really exciting business in renewable natural gas. It turns out that landfills, when biodegradable waste decomposes, it generates or it emits methane. Mm-hmm. That methane can be captured and extracted from the landfill and run a few different iterations on processing, and you pull out natural gas. And so you have a company like Waste Management, which trades at EBITDA multiples in the low double digits. They are recreating natural gas at 4 or 5 times EBITDA. An extremely compelling use of capital. These projects are greater than 40% IRRs. And so this is a business that you might not normally think of as part of the energy transformation, but actually plays a really important role.
Yeah, and then of course railroads, which makes sense if we're having to build our infrastructure out.
Right.
Yeah.
So railroads are perhaps, like you say, easier to think of in terms of the energy transformation. As we are building more manufacturing in North America, you need railroads to transport those materials around the country. And let me give some stats on that. So the US is being remanufactured. Some of this is from investments in our energy system, and others is because supply chains are being brought back from China to North America. Since 2021, we've seen about $1 trillion of manufacturing announced in the US. That's almost 4 times the normal rate we would expect. It's huge. It's big plants like Taiwan Semiconductor in Arizona. It is EV battery plants, it's petrochem plants, it's small things like mattresses being manufactured in Indiana instead of in China. And that manufacturing, all those dollars mean you need more materials, and that's going on to railroads to help build these factories. They're also 80% more fuel efficient or emissions efficient than trucks, so that's a nice thing as well.
And finally, aerospace.
Aerospace, another very important role in decarbonizing our world. Commercial air travel generates a lot of carbon emissions, as you might imagine. We own a few companies in that value chain: Airbus, Safran, GE. Airbus assembles the planes. GE and Safran are dominant players in the engine manufacturing business. These companies are building aircraft that are 20% more fuel efficient than legacy aircraft. They're taking market share, they're growing at rates well above the end market, and are adding a ton of value.
Yeah, it's so interesting to see this transformation as, let's call it, older industries like railroad,
Right.
like commercial aerospace, how they themselves are becoming technology companies by leveraging emerging technologies to transform their business. So putting all this together, how should advisors be thinking about ETFs for their clients to capitalize on these things?
So you hit a point that I think is so important, and I want to really dig into it, which is some of these old economy companies. So when we invest in the energy transformation, we think there's about 1,000 businesses that are relevant. And those businesses look a little different than you might guess. If you ask a person on the street, hey, energy transformation, what do you think? Battery storage, wind, solar, great, those do play a role, but there's a lot of brown, old economy companies, whether it's legacy energy businesses or companies like GE, that we think are critical to navigating the bridge from where we're at today to 100% renewable power generation. We think that brown is where the value creation opportunity is. That's a very unique aspect of our strategy, and if you think about what advisors may need for their clients, I don't think you'll typically find that. You certainly don't find that in the S&P 500, which is obviously heavy, 30% in the big seven. So a unique approach, and that's
When you talk about waste management with what they're doing with methane, right? Like that was the first thing I thought of. Like, we think of waste management, you think, garbage trucks and whatever, but what they're doing with newer technologies to advance the energy transformation is fascinating.
Right, the list goes on and on. So Occidental Petroleum is a large investment of ours, and they're a driller. They're an E&P company, but they're generating a ton of cash flow. What are they doing with it? They're investing in carbon capture, not only underground, but direct air capture. We think they have a right to win there. They're deploying this capital at really compelling projects, compelling return projects that is good for the world also, and we think creates a ton of value for shareholders. We're buying Occidental and other oil and gas businesses at 4 or 5 times free cash flow. That's a bet I like to make. Yeah.
All right, Eli, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Exchange. I'm Jill Malandrino, Global Market Reporter at Nasdaq.